IFRS 16 requires lessees to capitalize all leases. That means if you're a lessee and you're renting something, you have to recognize that thing as an asset on your statement of financial position. And you have to recognize the present value of the expected lease payments as a lease liability on your statement of financial position, unless you meet one of two exceptions. So the first exception is if it's a short-term lease. And by short-term, I mean that the lease term is 12 months or less. So let's say you're renting a piece of equipment for just 6 months. In that case, you meet the exception. Okay. Now, if it's a lease of a low value asset, meaning that the fair market value of the thing that you're renting is $5,000 or less at the beginning of the lease. So let's say, for example, you're renting a truck, and at the beginning of the lease, you say, wow, the fair market value of this truck is just $2,000. Then you can meet the exception. Now, if you meet one or both of these exceptions, you can make a choice. This is an election. You can make a choice not to capitalize the lease. And if you choose not to capitalize the lease, what this means is that you're not going to recognize an asset for the thing that you're leasing on your statement of financial position, and you're not going to recognize a lease liability. Now, in terms of the income statement, you're not going to recognize depreciation expense and interest expense, which are what lessees have to recognize when they capitalize a lease. You're just going to recognize a line item called lease expense every period, and you're going to recognize that on a straight line basis. So it'll typically be the same each period. So, for example, if you're renting something for 6 months, and let's say it's $500 a month that you're renting for, just every period as a lessee, you would just book lease expense of $500 every month. $500 lease expense, $500. There's no depreciation because you didn't bring the thing that you're leasing as an asset on your statement of financial position. There's no interest expense because you didn't recognize any lease liability, so there's no liability there to incur interest on. Now, here's an important caveat. Let's say, and some companies would think, oh, well, hey, I don't want to bring a lease liability on my statement of financial position, so I want to rent something, but I want to rent it for like 30 years, but I don't want to capitalize this lease. So they might think, well, I'll structure it as a short-term lease, and I'll just say it's just a 1-year lease, but it's renewable, so I'll keep renewing it. I'll renew it for the next 30 years. So they might think, well, I'll just have a 1-year lease, and I'll just keep renewing it. However, doesn't work like that. If you have a 1-year lease, so like this example here, and it's expected that you are going to renew it, then you don't qualify for the exception. In that case, you would have to capitalize the lease. So even if you try and get around the rules and say, well, I'm going to structure it as a 12-month lease, but I'm just going to keep renewing it, that doesn't work. You're going to have to capitalize the lease.